So Chapter 5, we're going to be working on unemployment comp. We're going to be looking at the Federal Unemployment Tax Act, which you might remember from the first couple weeks of school. Number 2 and 3, we're going to figure out what are taxable wages. How do we figure out the amount of the tax? And there's also this kind of weird thing with FUTA where you've got this credit that goes against the tax, and we're going to have to kind of learn about that. We're going to just have an overview in SUTA of the experience rating system. And then number 5, we're going to spend quite a bit of time figuring out how to fill out a 940. We've learned how to do a 941. Now we're going to learn how to do a 940. Yeah, so that's basically what we're doing in this chapter. So if you remember, FUTA was passed as part of the Social Security Act of 1935. So a lot of people say it was, or think it was like a separate piece of legislation that was umbrellaed under the Social Security Act, which means that the establishing OASDI, Medicare, FUTA, SUTA, that all happened under one umbrella under FDR and the New Deal. FUTA is only an employer tax, so only the employers pay it, and it's not used for benefits, is it? What is FUTA tax actually used for? Yeah, it's an administrative tax, isn't it? So SUTA was established at the same time, but this differs in quite a few ways. Primarily in that each state can do whatever they want with SUTA as long as they comply with some big general guidelines, like you've got to offer unemployment benefits to people, right? But there's different caps, there's different rates. In some states, employees even pay into the SUTA pot, right? In Montana, only the employer pays in. But in some states, I think the one you're working on in Pennsylvania, they have some employee-paid SUTA as well. So it's different in each state. And then this last comment says, in the current economic situation, unemployment insurance programs are being stretched very thin. That is really kind of turned around. It was mostly, between 2008 and about 2012, even into 2013, things were very, very desperate in many states and even broke. I mean, whole SUTA programs had gone broke, and we're going to see what happens when, like Michigan, Arizona, Nevada, Ohio, California, I mean, their programs went broke because they were paying out so much unemployment benefits. Things are definitely on the rebound, and we're going to see when we look at the rates that states have kind of stabilized their programs, and they're not charging such exorbitant rates anymore. Okay, so who is covered under FUTA? In other words, if I'm an employer, how do I know who I have to pay FUTA on? It's basically if I'm an employer that's had $1,500 or more of wages due in any quarter in the last year, then I've got to file a FUTA tax return. So if I just have somebody come and work for me for 3 weeks in the summer to help me harvest my cherries up at the Flathead, and I don't get to the $1,500 in any quarter, I don't even have to file a 940 or pay FUTA. Or even if I'm really tiny, but I have somebody work for me one day in each of 20 weeks, then I've got to do FUTA. And there are, in fact, special rules if you're a household employer, so you've got like a household staff, or if you're an agricultural employer. So if you're liable for FUTA, then you've got to declare all your wages for all year for everybody. So you're either all in or you're exempt. And when they look at who is included as employees or who's covered, it's pretty much everybody, part-time, full-time, temps. If you're on vacation, if you're agricultural employees, everybody's basically covered. And this is just really drawing attention. So common law relationship means the expectation is that we have an employee-employer relationship. And then this is talking about people who are considered statutory employees. And statutory is a word that means it's encompassed in statutes or law. So there's specific laws that say traveling salespeople are employees and covered by FUTA. Drivers who deliver laundry or food and beverage distributors are by nature employees, and you can't muck around with that. Even if it looks like an independent contractor situation, you have to treat them as an employee. So that's a statutory employee. So on the other hand, who is specifically excluded? In other words, specific exceptions are as follows. So this is a list of the kinds of people that are definitely not included under FUTA. So partners in a partnership. So if Kelly and I have a partnership and we import rugs from Pakistan, designer rugs, he and I, and we employ, you guys are our salespeople and our installers. You're all of our employees. We have to pay food on you, but we don't have to pay food on ourselves. So partners in a partnership specifically excluded. If you're on a board of directors, which is what this is, if you are on an advisory committee or a board of directors, you're not, and you're given a stipend for doing that, you're not considered an employee. You're not having to pay food on that. We know that independent contractors are exempted. We know that people that work at home, so I go to a central warehouse and I bring home, I'm an envelope stuffer, or I do some sort of quality control and I bring that all home, I'm exempt from food there. If I sell life insurance full-time, I'm exempt. Kids under 21, if you have a business and then you employ your kids, you don't have to pay food on them. If you're an RRTA, does anyone know what that is? It's a railroad employee, Railroad Transit Authority employee. RRTA employees have their totally own system for unemployment, for Social Security, for health care, and they don't really participate in the same program as the rest of us. It was a strong lobby in the early 1900s when railroads were, linking coast to coast, so to speak. And it was a very strong and specialized group of merchants on the East Coast working with West Coast capitalists and entrepreneurs, got this railway system together. And so as part of that historical convergence, they don't participate in any of our systems. They've got their own system. And same with the government. Really, those are the only two groups of people that don't participate. So if you work for the federal government or the railroad, you have your own everything, and you're not part of the programs that the rest of us are. Let me go to the next page. Page down. Okay, hold on a sec, sorry. Does it say not responding somewhere? There we go. So if you're covered under SUTA, you're covered under FUTA, and vice versa. Did that? I'm sorry, hold on just a second. I want to make sure. Yeah, okay, so that's where I'm supposed to be. Okay, so SUTA. If you meet these three tests, and you guys should be able by at this point, because we've talked about this quite a few times, the employee isn't going to be covered under SUTA. So what are those tests? Is the worker free from control? Is the work performed outside the usual course of business? Or is the person customarily engaged in an independent trade or business? So what kind of person are they talking about here? Yeah, it's back to same. This is basically describing an independent contractor, and therefore we don't need to worry about covering them. So this gets a little bit interesting, and we have a lot of examples of this in Montana. So you're a multi-state employee. meaning I've got employees that work in multiple states. Who do I pay my SUTA to? So in Western Montana, you could easily have, like a small log liner business that has employees in Idaho, employees in Montana. Who do I pay my SUTA to? Or, over in the eastern end of the state, a lot of people also working in North Dakota, where with multi-state employees, the question arises, who am I liable, which state am I liable for SUTA to? And then also, conversely, if you're a Montanan and you're working in Idaho and you get laid off, where are you going to claim unemployment from? Are you going to claim it from Idaho? Are you going to claim it from Montana? So these are the kinds of questions. So really these 4 blue bullets are what the employers are required to look at to determine where to pay their SUTA premiums. So the first thing they look at is, where's the work localized? In other words, where are the actual tasks being performed? Well, I've got, my log liner does some logging in the Bitterroots and the Sapphires on Montana side, and they do some logging in the Frank Church Wilderness on the Idaho side. So that's not very helpful. I can't really tell you where the work is localized. It depends upon where we're logging. And it says this is the most compelling criterion most states assign coverage if work is primarily performed within that state. But the example I'm giving you, it isn't primarily anywhere, right? You're logging all over. Secondly, where is the operational base located? Well, my headquarters are in Darby, but I also have a field office set up in Challis, right? So that doesn't really help me. Where are the operations directed? Well, that's again kind of the same thing. I've got a headquarters. They bid on the job, and they got the job, and they went out and did the scope of the forest. But the base itself, where the work is performed and the logs are weighed in and the cuts and grades are made, is in Challis. So really, you can go through all these and come down to the 4th one, which is where is the employee's tax home, it's called. So if I'm a Montana resident and I go live in a canvas tent for 5 months to go log in Idaho, I'm still a Montana resident. That's my tax home. So at the end of the day, the employer is going to go through all these and end up with this one. Conversely, if I told you I'm a Montana resident, but everything's down in Challis, that's where the base is, that's where the work is localized, then even though I'm a Montana employer, I'm going to pay my SUTA to Idaho. And if something happens to my Montana guy or girl that gets laid off, they're going to go to Idaho to claim unemployment. So this can actually, it doesn't look like, okay, how crazy can this be? It can get quite complicated if you're in number of states. I know one of our big employers here is ALPS. They do insurance for attorneys, and they're in like 42 states. They've got employees in 42 states. So, I mean, they're filing quarterly SUTA returns in 42 states and complying with payroll law in 42 states. Okay, so then there's also, which is this we definitely do have with North Dakota, something called a reciprocal agreement. Reciprocal meaning it goes both ways. And basically what happens there is kind of jumping down to the second bullet, is that states where there's a lot of overlap, like eastern Montana and western North Dakota on the Bakken oil fields, and there's a lot of folks that are working, on both sides of the border, or have residence in one state and work in the other, then they make an agreement between the states, and they just say, okay, everybody is going to pay unemployment and claim unemployment benefits in North Dakota. Or, you just choose a state. And it's like a memorandum of understanding, a reciprocal agreement. It's a contract between the two state departments of labor and industry. And it benefits the employer, because the employer can choose which state is most lucrative to other words, what has the lowest cap and the lowest rate schedule. So like North Dakota never went through the boom and bust in 2008 through 2012 because that was the time when energy production was pretty peaked. So they had probably a very competitive SUTA tax table rates, right? So that's probably where you would choose to you have your reciprocal agreement. So it's based on what's got the lowest cap, what's got the lowest tax rate schedules. That's where I'm going to choose to foment my reciprocal arrangement. Okay, anybody remember what the rates are, the wage base for FUTA and SUTA? Back to our little tax tables from
0.6.
the caps.
Oh, the caps.
Yeah. That's taxable
30,
wages is
yeah,
another word for
30,000.
Yeah. 7,000 is the cap for FUTA. Is it 30,000 even? 30,500. I don't even bother memorizing them anymore because they just change every year. I mean, I shouldn't say that. I've got a general idea, but food has stayed the same forever. And OASDI changes every year and SUTA changes every year. And yeah, so those are our wage bases. So taxable FUTA wage base caps at $7,000 a year. So it's $7,000 per employee per year. If you go and have 4 jobs and make $10,000 in each of them, does each employer have to pay up to that $7,000 on you? They do, because how do they know about each other, right? Versus, like say SUTA, say you work for me for the, Ohio Motor Castings Company, and you work in Ohio, and then you go and spend some time in Vermont, and then you go and spend some time in Illinois, and you work for me, but you work in 3 different states. Do you have to pay SUTA in each state on the wages? And you do. But with the FUTA, am I going to have to pay up to the $7,000 3 times? No, because you stayed with the same company. So really the question you have to ask yourself is, what is it that I'm doing? Am I switching companies? Am I switching states? And just kind of think through it. If you're with one company, you've only got one FUTA cap. But your SUTA is different in each state, even if you're only with one employer. So let's just take a quick peek if we can, if you've got your book handy, pages 512 and 513. And again, these numbers are probably already a little bit different because they change every year, every state. But basically you can see, like, if you go down and look at Montana, yeah, these are last year's numbers, 2015 numbers. So it'll tell you size of the company. If you have gross payroll over $1,000 in the current year, then you got to pay SUTA. What is the minimum and the maximum? Our lowest rate on the bottom of page 5-12. Our very lowest rate is 0.02%, and our very highest SUTA rate is 6.12. And then it tells us the cap is $29,500, which that's last year's cap. And then it tells you how long do you have to wait before you get unemployment. You have to, maximum waiting period is 1 week. What's the most you can get in Montana for unemployment for a week? $471. What's the minimum? $134. And what's the maximum that you can actually be on unemployment? 28 weeks. So this chart tells that for every single state. So if you're, and you can see like some of the states like Washington, I mean, their cap's $42,000. And then some states have really low caps. So it's really all over the place. at any rate, this is kind of your Bible as far as when you're looking up a specific state. Again, these are 2015 numbers, but this is a 2015 edition, so there's really nothing to do about that. Okay, so what is all included in the calculations for FUTA? And now you've seen this enough times that this should start to be kind of status quo. All of your wages, your bonus, your stock comp, your tips, retroactive wage increases. I mean, basically everything we've talked about is includable. There's very little, aside from the amount you pay people over $7,000, that's excludable. Of course, you don't need to pay on retirement pay or tuition or back to this meal and lodging if it's for the employer's benefit. So it's really only your standard items of wage. So this is where it gets a little squirrely. So what rate do you remember memorizing for FUTA? 0.6, right? And that's why this is so weird. Because here it says it's 6%. But what we memorized was 0.6%. And the reason is that the way the system's set up, and I never even knew this until I started teaching it, because all I've ever paid is the 0.6, is you start with this gross FUTA rate of 6%, and then you get a SUTA credit for 5.4, which brings it down to 0.6. And you might think, well, why do I care about that? And you really don't unless you're in one of two special situations, and I'll tell you what that is in a second. So basically, what we're saying is this is what it looks like. 6.0 minus the SUTA credit gets us down to what all along we said was the 0.6. And really, if there's nothing else going on, all you need to know is multiply up to 7,000 per person by 0.006, and you're going to get the FUTA rate, or FUTA tax. But here's kind of some weird little caveats. So is this saying that everybody pays 5.4% SUTA? No, because everyone's got different rates, right? What they're saying is it doesn't matter. You might have a 4% SUTA, you might have a 6% SUTA, you might have a 1% SUTA. You all get to use this credit, except for if one of two things has gone askew. And I'll explain that in a second. So basically, that's what I just wrote. Okay, so the first thing is that could lower your credit is if you haven't paid your SUTA on time. So if you're an employer that's chronically late making your SUTA payments, you don't get that full 5.4% credit, so that raises your FUTA rate. Okay? Secondly, and this is basically, I'd never even really seen this until the recession hit, and then all of a sudden it was all over. So let me explain what a Title 12 advance is, and then I'll tell you, if you're in a state that is in default of its Title 12 advances, your SUTA credit is going to go down 0.3% a year. What a Title 12 advance is if you're in a state that's gone broke with its unemployment, like Arizona, I think was the first, they can't just, by law, they can't say to their people, sorry, we're out of money, no unemployment benefits. By law, they have to turn around and take a loan from the federal government. And that's called a Title 12 advance. So they give Arizona infusion of, $400 million. And Arizona pays its unemployment benefits, stays current with all that. And they have like another bad year, they get another loan. Now let's say they owe $1 billion. They have to start paying it back 2 years after they first took the loan. And if they don't start paying it back to the federal government, they're technically in default. So this credit in the first year that they're in default, you don't get a 5.4% credit this year, you get a what? Goes down by 0.3. So you get a 5.1% credit. What does that do to your FUTA rate? If your credit goes down, your FUTA rate goes up. And then they're still in default. So the next year, the credit's not 5.1. It's 4.8. And now guess what? Your FUTA rate goes up again. So what we'll see when we start doing the 940, which is the tax return that we do to record and report our FUTA, is that there's a schedule that attaches to it that shows all the states and what this number is. In fact, in essence, how many years in default are they? Okay, and there's a number of them that are still in default. So just to kind of recap this, if you were to explain to somebody what FUTA, the rates are, what would you tell me? So I'm I'm trying to understand the financial system, the payroll system, and I'm like, so how much do we pay in FUTA? What would you tell me? As a general rule. Can you just go straight to the 0.6 anymore? What do you have to say? Yeah, and what is this called again? 6.0 is the what? Right, that's the gross FUTA tax rate. And gross always means before something. Gross minus something equals net, right? Okay, so then what are you going to tell me? I've got a 6% gross FUTA rate, but you have to subtract. Well, it's not going to always be 5.4. What's it called? The SUTA credit. Can I just plug in whatever my SUTA rate is? No, you always start with what? That's the jumping off point for everybody. It doesn't matter if you've got a lower rate, a higher rate. This is your jumping off point. But then you have to ask me a couple questions. What's your first question? Does everybody get to keep this credit? No, so what's the first question? Yeah, did you pay on time? Yep, I paid on time. What's the second question? So we're just trying to get to the rate, then we've got to figure out the dollar amount. What's the second question? Yeah, I paid on time. Second question is, are you entitled to 12 defaults? No. This is, did you pay your SUTA on time? Did I make my SUTA payments on time? Yeah, I paid my SUTA on time. This doesn't have, I didn't do anything wrong as an employer here. I just happened to own a business in Nevada. And Nevada went broke, and Nevada borrowed money from the feds, and Nevada didn't have the revenue to pay it back in time. And I just happened to be a Nevada employer. I didn't do anything wrong. But I'm located in a Title 12 default state. Are you with me? So now what do you want to ask me? What does that do to this? Yeah, how many years in default are you? So from the time you get the money, you have 2 years to start paying it back. Okay? And if you don't start paying it back in that time period, then you go into default. And for every year you're in default, this number goes down by what? 0.3. Right? So, and I think we've got some that are, some states that are in 3 years of default. So for every year you're in default, essentially, I'm changing my net FUTA tax rate. It's not 0.6 anymore, is it? It's 1.5. This is called net. So really, up until now, we had just learned, all you guys knew is, you know, the 0.6% and $7,000, and that was hunky-dory. There's more to the story. In this chapter, you learn the whole story, and now you're responsible for asking these two questions. And they're right on the 940. So, yeah, so that's basically that. So the answer is no longer a nice, neat little 0.6. It's, well, the gross is 6 minus 5.4, da-da-da-da-da. And you got to ask these two questions. Okay. Anybody want to make sure they understand this, or do you get it? So the next thing to talk about is so that was how FUTA rates work. Okay, then you got this whole issue. We just looked at this table, and in Montana, I think it said that our rates go from 0.02% to 6.12%. That's a big difference, right? How do you determine what each employer pays? What do you think they do, the Department of Labor and Industry? What do you think they care about to determine that? Yeah, how long have you been in business? Sure. What else? It's not even how much money I'm making, it's how much am I paying in. So if you guys all have, you know, I have you all at jobs at $35,000 a year, you're all capping, right? So I'm probably making pretty significant payments into the system. So they absolutely want to know what kind of money's coming in, and then what else? Yeah, how many claims do you have? If you hold on to your employees and you have very little turnover and very few claims, that's going to drive your rate down, obviously, because you're not very high risk. It's really an insurance policy. If you have a ton of turnover and people are claiming all the time and you're not paying in that much and you're getting tons of claims, of course what's going to happen? You know, your rates are going to go up. So really, when you have good employment policies and happy employees and da-da-da-da-da, that's really a very tangible cost savings over time because you keep your people happy. It keeps your SUTA rates down. And yeah, that's basically what that says. It is sort of interesting if you're a nonprofit, rather than pay SUTA tax, you can just actually reimburse the state for actual people that become unemployed and collect. So what that means, like they do that, my husband's the controller at the youth homes, and they use this model. So they've got 140 employees, they've got 7 youth homes all over western Montana, blah, blah, blah. They don't pay SUTA, which is a huge savings, obviously, on 140, 50 employees. But if somebody gets laid off for reasons that would be that you would get unemployment benefits, they've got to write the state a check and then directly for that person's unemployment. Why would the youth homes do that? No, there's not that much turnover. And they've done the calculations. And obviously, it looks in the long term like they're going to save money by not paying SUTA and only having to pay people that actually get laid off for a valid reason, right? So they do actually have some turnover, but most of them are for people leaving of their own accord, not because they're asking them to. So that's what nonprofits are allowed to do. Only nonprofits. You or I couldn't decide to do that in our business. And then the other thing to kind of note here is, as I was saying, like say that I'm a new company and I start out and I've got a really bad HR record the first 2 to 3 years and I've overhired and I don't really know how to schedule, and conversely, I've had a lot of people that have gotten laid off and collected unemployment. And now my rate is like 6%, right? And that's, I mean, it's expensive. And then it's like, you know, I get a new controller, HR director in, and he says, you know, we've got to get our policies under control. I don't want this 6% rate anymore. I think that we can do a lot better than this. So they form a subsidiary and put all their business into the subsidiary to leave the old SUTA rate behind. Are you with me? Okay. They're cheating. Yes. That's exactly what they are. They're cheating. They're dumping their SUTA rate by just forming a new business entity and moving all their assets and operations into that. That's done all the time in America when our companies go offshore, so they don't have to pay income tax in America. They still get all the benefits of being American citizens. I feel very strongly about this, but they put their corporate ownership in Ireland or the Bahamas or Switzerland, and they don't have to pay corporate U.S. tax. I mean, I just think it's complete crap. If you want to do that, that's great, but go live there then. You don't get to be an American if you don't pay tax here. And that's what happens with this. They form these shell companies and move everything in. And that's, I mean, it's illegal, and you can't create an artificial new entity to leave your old SUTA rate behind and start over fresh. You've got to work overtime to bring it down with a good track record. Who did I just see reincorporated in Canada? I think it was either Amazon or Apple. It was one of the big A's. And the amount, I mean, billions of dollars of lost tax revenue to the United States. If I was in charge of tax law, I would not allow that. That's all I got to say.
There's always a way out of underneath something. You always find a new way. It's like robbers always find a new way to get into your house, whether you got a security or not. You know what I mean?
But the problem is that for most of us that earn W-2s, we don't have any way to play with anything.
Right.
We don't have a $5,000 an hour tax attorney on our, you know, we just earn our money and pay our tax. And that's what's so irritating to me is that, again, it's back to the, you know, the people that arguably least need to save money, you know, are the ones that can afford to skirt tax law. And that's irritating to me.
Yeah.
Okay, so again, SUTA rates, lower unemployment if you've had a stable work history, and then this is what I was talking about, positive balance and negative balance. A positive balance employers was when you've paid in more tax and you've had claims, right? So they built up a balance in their reserves. So I paid in 10 grand a year in SUTA taxes, and I've only paid out unemployment of 3 grand a year. So I've built up a positive reserve. Conversely, if I'm negative balance, that means I've paid out, or there's been more claims than I've paid in. And so that impacts your rates, and that's called, I mean, you and I basically call it a SUTA rate, but in the lingo, it's called experience ratings.
So if you have a high turnover, how long does it take you to get that tax rate lowered if you lower your turnover rate, or does it?
I mean, it's going to take a couple years. It's going to take a while, and that's why people do this dumping. They're like, oh, I don't want to have to pay those enhanced rates for 3 or 4 years while I'm trying to get my policies under control. I want the immediate benefit of it. It's like, well, the math isn't there. It's like if any of you have ever had been on the point system with your car insurance, and you get X amount of points, and your insurance skyrockets.
Kind of like Progressive and their snapshot.
Yeah, it doesn't just go down one day, does it? It incrementally goes down as those points fall off the back end, right? And God, I had 2 teenage boys and a husband that acts like a teenage boy behind the wheels of a car, and it's like, I mean, it would just make me crazy. I'm like, I've never gotten a point in my whole life. How can you guys have like 50 points between you? I mean, I just never got it. It's like, are you kidding me? Yeah. I don't care anymore. They can pay their own insurance, but it's like, that used to make me whack too. Some states require employees to contribute to SUTA. If you live in a state like that, you probably think a lot about it. It's usually really, really low. Like, does anybody remember what the rate is in Pennsylvania in that project we're doing now? I mean, it's tiny.
The contribution rate is 3.678, but the employees pay 0.07 on the gross.
0.07, yeah. So usually when an employee pays, there's two pieces to it, right? The part the employer pays and the part the employee pays. And Haley was just saying, it's around 3.7% for the employer. Yeah, so on a $1,000 paycheck, you're paying 70 cents. I mean, it's not like you're.
So you times both of those by the employee?
Yes.
Okay.
Yeah. So if you're my employee and you make $1,000, he's paying in, or I guess $37.07. Okay, so let's just go over the 940 and then we'll practice them on Tuesday. So a Form 940 is, well, let's just actually take a look at one. So there's a picture of one in your book.
543.
543, thank you. And just a couple things to point out, if you could take a peek at this. First off, when we were doing our 941s,
Or is it the 558?
no, it's 5-43 is what we're looking at. How often when we were filing our 941s, how often did we file? Every quarter. How often does it look like we file our FUTA? Yeah, it's an annual. It's right in the title, right? Employer's annual FUTA tax return. So we file annually, but we only have to pay when we get to $500. So if you're a small business and you never get to $500, you don't even have to deposit all year. So the return itself is due by January 31st of the next year. And then let's look at the Schedule A. This is what you have to attach if you either are multi-state or you have a SUTA credit. And that is on page 5-52. So can you just kind of look at this and tell me which states you think are in Title 12 default? Yep, North Carolina, 5, New York, 6, Ohio, 7, and Virginia, 8. There's 8 states that it looks like are in Title 12 default. And do you see that? Because they've got numbers under that reduction rate. So on the 940, one of the first questions is, did you pay your SUTA on time? Yes, I did. Okay, great. Are you in one of these 8 states? If you are, then you've got to go fill out a Schedule A because you're not really paying 0.6, you're paying something larger than that. And then we file our 940 with the IRS District Center in which the business is located. So in Montana, you're going to file in Ogden, Utah. And you can e-file your Form 940. It works exactly the same way as your other returns, which is you submit like an electronic request to file, and then you can electronically file, so you don't have to do paper. And then I also want you to look up in the top right-hand corner of the 940. It says type of return amended. And basically what this is you file a 940 and then you realize like, oh crap, I made mistakes. Then you're going to be able to go back in, mark the amended, and then just do another return to correct the mistakes. And then the other thing is a lot of times when people go out of business, they don't file a final return. And if you don't do that, you're going to keep getting bugged sort of forever. Like, where's your tax returns? What's going on? You probably owe us back tax. So in your final year of business, again, up in the top right-hand corner, in box D, you can click final, the business closed, or we stop paying wages. And then you're done. So basically, let's just kind of go through this and look at the return. And there's 7 parts, and it really, I mean, they've got it kind of simplified now. It's not too terribly tough. Part 1, they want to know about the SUTA payments. Are you in a Title 12 state? Did you pay on time? Da 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 da. So all the things we talked about. In Part 2, you have to, in line 3, you're going to put all your gross wages, but only part of that's going to be taxable. So they want to know in lines 4 and 5, how much did you pay that's exempt from FUTA, like your contributions to 401ks and things like that. And they want to know how much did you pay people over $7,000 per person per year, because neither of that is susceptible to FUTA. So when you subtotal those and subtract them from number 3, you get to total taxable FUTA wages, and then line 8 is the amount of the actual tax. Line 12 is, you carry it down there, and then line 13 is how much did you deposit for the year. And again, this is on the next screen, you're required, this is the rule for deposits, you're required to deposit quarterly, but only if it gets over 500 bucks. So if you go all year and cumulatively you don't get to 500 bucks, no big deal, you don't need to deposit at all. So down there then in that case on line 13 you're going to put 0, and the whole amount is going to be due on line 14. By law now, everybody's got to, so there's 2 things, depositing electronically and e-filing. Everybody's required now to deposit electronically if you have 2,500 bucks or more a quarter in tax liability to the feds. So again, sorry. Eek. So again, a lot of people aren't gonna get there in Montana because they're just small businesses. But if you are of any size, then you've got to sign up and deposit. Does anybody remember what the name of that system is that they deposit through? EFT, yeah? EFTPS, yep, good. Electronic Federal. Yeah, close. Electronic Federal Tax Payment System, EFTPS. So when you sign up for EFTPS to do your FICA FIT, that's also the same system you do this through. And here are your deposit dates, and these should look like some other set of dates you know. What other sets of dates correspond with this? Yeah, it's the dates that your 941, your actual 941 tax returns are due, right? So your deposits are due, you electronically deposit them, and then you file the tax return once at the end of the year. And basically all they're telling us here is when you actually send your 940 in and your payment, you've got to print out this little voucher. And like everything in tax law, if you don't pay on time, or you underpay, or you don't file, or you willfully misrepresent your taxable wages, then you're going to have penalties and possible criminal charges. So SUTA is different state to state. In Montana, we file our SUTA quarterly, and it's due those same 4 dates, 4/30, 7/31, 10/31, and 1/31. It feels like there's a lot of dates to keep track of, but everything's really on the same cycle. It's every quarter. And really, SUTA reports do exactly what FUTA does. It tells everybody's gross wages, how much is taxable, what's the rate, have you deposited anything. The one thing that's a little bit different here is on a SUTA report, you have to actually, and this is the same in every state, you have to line out every single employee person by person and put in their gross wages, and because that's how they're going to process your claim if you become unemployed. That's how they record how much you've made. So the other thing is to be aware of too, if like you're on unemployment and you think, oh, no big deal, I can just do a little bit of work on the side and they're never going to find out. Yeah, sure they will, because all the employers are going to file that data and it's going to be all cross-checked with unemployment benefits. Also, you're not allowed to go to school full-time if you're on unemployment, and the university sends big magnetic reels once a quarter. It's got everybody's social security numbers of anyone that's at 12 FTE. So that's cross-checked. So all those things people kind of think, oh, how are they going to find out? I mean, yeah, they're going to find out. It's all, systematized to do that. And really the only thing interesting here is that also you're going to have to file a separated employee report as an employer. And so basically what happens if you lose an employee to a situation where they actually should be able to claim unemployment is he or she is going to call the Department of Labor Industry and say, I'd like to put in a claim. And then what's going to happen to you as the employer? Do you get a chance to contest it? Yeah, they send you a notification of separation. And if what the person said is exactly what happened, like, yeah, I laid her off because, where our sales are down 30% and I don't have a position for her anymore, there's no contest. Of course you're going to get unemployment. But if you say I was laid off due to lack of work, but what really happened is that you were not performing, I'm going to write back and say, no, she wasn't laid off for lack of work. She was laid off due to incompetent performance or whatever. That's when you're going to start the appeal process and the grievance process, right? And those can go all the way up to the the state level labor relations board. And so, and sometimes they do. Why would an employer fight it so far? Why wouldn't they just give it to them? Yeah, it all impacts their rates. And a lot of people do it too, just out of principle. Like, you stole from me, I'm not going to let you collect unemployment from me now too. But it is really because of the impact on the rates. Can you get unemployment if you're partially unemployed? You can if you get cut back from full-time to part-time. You can get partial unemployment benefits. I mean, they're never very exciting amounts, but I mean, $89 a week, I guess, matters if you're only working 20 hours a week. Okay, so that is really, in a nutshell, all I have to say about that. What I'd like you to do, does everybody remember how to get to the forms and publications on the IRS website? I'll just walk you.
Chapter 3 or something?
Do I? Okay, well, let me just walk you through this really quick so that you all know how to get there. Because I'd like you to bring 2 940s on Tuesday. So just go to irs.gov, and then up in this top left-hand corner are forms and pubs. And then search is also up there in the top left. And then just come in here and put your 940. And we want one for 2015. And it's a PDF. And I think all you need to do is print the first 2 pages. Let's see here.
So you want 2 of them?
2 of them, but I think, let me just see how many pages there is, because you don't need to print all the pages.
I just printed 1 and I printed the first 2 pages.
Yeah, it's a 4-page file. Just print 2 copies of the first 2 pages. Okay, we will go over the homework on Tuesday for Chapter 5. The only one you're not going to be able to do is, I think, the last one that's assigned is the 940, and we haven't done that yet, so don't worry about doing that for Tuesday. But just do everything else, and then we'll practice these together. Okay? All right. Happy St. Patty's Day. Happy weekend.